Welcome everybody. This presentation is about non-monthly treasurer tasks, part of a three-part series. In the first part, we gave you an orientation to your investment club accounting. In the second part, we discussed monthly treasurer tasks. In this part, we're going to talk about non-monthly treasurer tasks. This includes handling things like expenses, bounced checks, advance payments, withdrawals, buyouts, your annual audit, and your taxes. There's a lot of material to cover here, so we'll just be touching on some of the basics. Since you don't do these things very often, you'll probably find one of the most important things to know is where to find reference material when you do need to make these kind of entries. Links to specifics about each of these topics can be easily found on the bivio help page. You can get to it using the help link you'll find at the top of your club pages. There are also links on the club resources page. You can find this page through a link from our home page. So first, let's talk about expenses. We use the term expense to apply to a very specific type of entry. An expense is a transaction where your club pays for something that is not a stock purchase or a member withdrawal. Money is taken out of your club assets and used to pay for the expense. For example, your bivio subscription is a club expense. A typical investment club will have very few expenses. As we'll be discussing, any expenses which you record will affect your investment returns, and most things you record will not provide you with much of any tax benefit. Despite this, club expenses tend to raise a lot of questions and take up a lot of unnecessary time for club treasurers. Here's an overview of what you'll need to know about expenses. First of all, everyone always wants to know what expenses are deductible. Then we'll touch on keeping expense money separate from money you use for investment. We'll also talk about how expenses are allocated or divided up between club members, and I'll show you how to enter expenses in bivio. And finally, I'll show you how to reimburse a club member who pays a club expense, either with a club check or by giving him or her additional units. Only certain types of club expenses are deductible. The definition of what is and is not deductible is found in IRS Publication 550, Investment Income and Expenses. Note that your club accounting is designed to account for your investment portfolio. You have investment income and expenses, not what's called business income and expenses. Deductible expenses include things like your bivio subscription, meeting room rental, postage and office supplies, fees paid for counsel and advice about investing, which could include a club subscription to Manifest Investing or Value Line, dividend reinvestment plan service charges, and these are the charges that are subtracted before the funds are used to purchase stock. If you have a safe deposit box, any percentage that is used for investment related activities is deductible. If you have a question about whether something is deductible, refer to Publication 550. Things which you might think are deductible but are not include expenses to attend stockholder meetings, expenses to attend investing conventions and seminars, food and refreshments, gifts, club parties, flowers, and also stock purchase and sale commissions. You do track these and they are important for determining your stock basis, but they're not entered as expenses. At the end of the year, any deductible expenses that have been allocated to you for the year will be reported to you on the K1 form that you get from your club. It will be shown on line 13 with a reference code of K next to it. If you itemize your deductions on your personal taxes, club expenses will be deducted on Schedule A in the category Miscellaneous Deduction. You will only be able to benefit from the deduction if the total in this category exceeds 2% of your adjusted gross income. Most people will not meet this threshold, so you're probably not going to get some big tax benefit from expenses paid by your investment club. There is a common misconception that there is a way for club members to make contributions to a club to pay for expenses which will be kept separate from contributions that are being invested. This is not the case. As we discussed in the orientation webinar, no matter how many club financial accounts you're tracking in your club accounting, for the purposes of the accounting, All of your assets are available for investing or for paying expenses. You don't record contributions members make to cover a club expense any differently than any other contribution. Record all member contributions as a member payment, no matter what it will be used for. When expenses are recorded in your club accounting, they are divided up and allocated to each person who's a member of your club at the time they occur. The default method of allocating expenses is by percentage of ownership in the club. This is the same way that income, such as dividends, is allocated. Percentage of ownership is tracked by the number of units each person owns. Expenses are allocated as they occur, based on each member's percent ownership when they occur. Percent ownership in your club may change every time payments or withdrawals are recorded. Here's an example. Suppose on May 1st, these were the percentages each of these club members owned. On May 18th, the club had a deductible expense of $100. It would be allocated to everyone like this. Now suppose on May 20th, some of the members' ownership percentages changed. That might happen if, for example, member payments for some of them but not others got recorded. Then on May 26th, there was another $100 expense. It would now be allocated based on the new member ownership percentages. As you can see, the specific transaction date and the sequence of each of your club's transactions is more important than in other types of bookkeeping you may have done. If your partnership agreement allows it, expenses can also be allocated in an equal dollar amount to each person. If you would like your expenses allocated this way, you would check the Per Partnership Exception box on the expense entry form. It is called Per Partnership Exception because your partnership agreement must specify that this is an allocation method your club has agreed to. When an expense is allocated this way, each member's account is reduced by the same number of units. Because of this, everyone's ownership percentages might change. Here's an example. Suppose on May 18th you had 100 units in your club and each one was worth $10. So each member owned this many shares and therefore had this percentage of ownership. Suppose you had a deductible expense of $100 and you wanted each person to be allocated $20 of the expense. You would check Per Partnership Exception on the expense entry form and $20 worth of units, or 2 units at $10 each, would be removed from each person. After the expense was entered, each member would own this many units. As you can see, this would also change their percentage of ownership. While some may consider this method of allocation equal, members with lesser ownership percentages are bearing more of the brunt of the expense. Note that there are only 2 ways to allocate club expenses. In both ways, they are allocated to all members of your club. There's no way to allocate an expense just to a single individual. For example, if some members want to subscribe to something but others don't, or different people want to subscribe at different levels, this is not an expense that should be paid using your club accounts. In addition to subscriptions, another individual expense that comes up frequently is restaurant meals. Suppose your club had a dinner at a nice restaurant and the total bill was $200. Suppose you had your club treasurer write a club check for the total. When she went to enter the dinner expense, she would have 2 choices on how to allocate it to each member, either proportional to their ownership in the club or in an equal dollar amount to each one. She would not have any simple way to allocate each person's actual bill amount to them. This cannot be emphasized enough. It will seem as though any expense related to your club or your club members should be paid for using the club accounts, but that is not true. If you do not want to allocate an expense equally or proportionally to everyone, don't use your club financial accounts to pay it. There is no benefit to doing that. Your club accounting will not track the tax benefits the members might achieve, and recording the cash that moves around in your club accounts requires complicated entries on your treasurer's part. Members should pay the expenses themselves and keep track of any tax-deductible expense individually to claim them as a deduction. You record an expense in bivio this way. First go to the Accounting Accounts page and you'll see a button labeled Expense. This will open a form where you can fill in the details about the expense. You'll pick the account you paid the expense from, the date that you paid the expense, the amount, whether it was deductible or non-deductible. We give you a menu of choices of the most common investment club expenses. Allocate per partnership exception should be selected if you want the expense divided up in the same amount to each club member. Finally, you'll see a remarks box where you can enter any notes that will be helpful to you in your record keeping. If you paid for this expense with a club check, this is a good place to make a note of the check number. After you fill in the form, you'll see the expense entered in your account transaction list. Since clubs cannot have credit cards, it is often convenient for an individual to pay an expense and then for the club to reimburse him. There are two ways you can do this. You can write him a club check, or you can reimburse him with units of ownership in the club. You might want to do this because it will not change the amount of cash that your club has available. It also might allow you to operate without having a checking account. In addition, it may result in quicker payment of expenses if you don't have to wait for a check to clear. First, let's talk about reimbursing a member with a check. Reimbursements sometimes get a little confusing because there's no specific reimbursement transaction. Instead, you record the expense as if it had been paid directly by the club. While you might write a club check, the check goes to the member who paid it rather than the group that provided whatever you are paying for. It works this way. First, your club incurs an expense and a member pays it, perhaps with his personal credit card. Your treasurer writes a check to the member to reimburse him, but it isn't entered as a check. It's entered as an expense using the expense form. You just make a note of the check number in the remarks field. You can also reimburse a member with units of ownership in the club. Conceptually, it works like this. First, the member pays the expense. Then you record the expense. It's allocated to everyone, so it is as if each member has chipped in to pay it. You could give the member a check to reimburse him like we just discussed. But instead, you take the amount of the expense out of club assets by recording it in a temporary dummy account, which you can name something like reimbursement or out of pocket. Then you record a member payment for the member being reimbursed. You say the payment is made into the reimbursement account. It's as if you gave it to him and he turned around and used it to make a new payment to the club. You don't actually have to give him a check, you just record the payment. Here are the actual steps that you'll go through to record this. First, if you don't already have one, use the Create button to create a new account on your Accounting Accounts page. Call it Reimbursements. You use a temporary account because there won't be any transactions corresponding to these on your financial account statements. Open the expense form using the Expense button. Record the expense as being paid from the Reimbursements account. After you enter this, you will see that there is a negative balance in the Reimbursements account. It will have a negative balance because it's an amount that has been removed from your club assets to pay the expense. Next, you record a payment for the member being reimbursed. Use the payment link next to his name on the Accounting Members screen. Record this payment as deposited into the reimbursement account. The amount taken out in the first transaction is used to purchase additional units in the club for the member being reimbursed. When you're done, the reimbursement account will be back to zero, the expense will be recorded, and the member will be reimbursed with units of ownership in your club. One type of expense clubs sometimes encounter is a bounced check charge. The charge itself is a deductible expense, but there are several other accounting entries you will probably also need to make to cover everything that has happened. Let's take an example of a $50 payment which bounces. Because of this, your broker charges your club a $20 overdraft fee. You will probably already have recorded a $50 member payment for this person. That's the deposit that's going to bounce. To reverse the original deposit, you'll have to record another payment of -$50, recorded on the date of the original payment, and use the same valuation date that you used initially. Then record a deductible club expense of $20. This is the bounce check penalty that your club was charged. If the member reimburses the club for the bounce check charge, record it as a fee of $20 received from him or her. If the member gives you a new check for the $50 payment, record this as you usually do as a member payment on the date you receive it. In summary, there's a lot to think about when it comes to club expenses, but there's not much benefit to you when you have them. You really should have very few to account for, and we'd recommend you handle any that you do have as simply as possible. Allocate them based on club ownership, and don't use your club accounts to pay for expenses that only apply to certain individuals. Our next topic is advance payments. I really hate to even discuss these because we like to encourage you to keep things simple. What we'd highly recommend is that you just give members immediate credit for deposits when you receive them. Why do we recommend this? Because you have the money. Why not use it for investing? Also, recording things this way is less work for the treasurer. If, however, you want to hold advance payments for the future, this is what you will need to do to account for it. First, create an advanced payments account. You'll create it on the Accounting Accounts page in a similar manner to the way I showed you how to create a reimbursements account. Record the member's advance payment as a transfer from the advance payments account to your brokerage account. This keeps the brokerage cash balance correct. The negative balance you will have in the advance payment account will reflect the fact that this money is not part of your club assets yet. Each month, as you're ready to recognize the receipt of the payment, record a member payment which is deposited into the advanced payments account. This will lower the negative amount in this account, meaning your payments are now being added to your club assets. One of the more involved transactions you'll have to do occasionally as a club treasurer is to process a member full or partial withdrawal. As we discussed last time when we talked about member payments, when a member withdraws assets, there's quite a bit of accounting bivio needs to do. Entering a withdrawal is more involved than just recording the amount somebody receives. A withdrawal is actually a distribution of member capital. Your club is a type of business called a partnership. There are tax implications to withdrawing capital from a partnership. Just like when you purchase a stock, you actually have a basis for your investment in your club. When you withdraw money, there may be a capital gain or loss to report on your taxes. You can find out what your tax basis is at any time on the member status report. If you withdraw all your money from the club on the date of the report, you would have a capital gain or loss equal to the difference between this column plus any income and expenses that have been allocated to you for the current year and the current market value of your share of the club shown in this column. If you withdraw less than the amount of your tax basis in a partial withdrawal, you do not owe any immediate taxes. Withdrawals need to be entered in a specific way so that your club records get updated correctly. These things actually happen when a withdrawal is entered. First of all, the amount the withdrawing member is owed will be calculated. The number of club units or shares that the member is cashing in will be removed from your club records. The proper additions and subtractions from the member's capital account will be made, and correct tax reporting will be provided. The member will need this information to fill out his personal taxes correctly. Fortunately, you don't have to do all this accounting. All you need to do is to make sure to enter withdrawals using the withdrawal form that you will find by selecting the withdrawal button on the Accounting Members page. When you fill in the information requested on this form, bivio makes all the appropriate entries in your accounting. So don't just give a member a check. Until you've made a withdrawal entry, accounting-wise, he's still a member of your club and his ownership percentage is affecting everybody else's. Before you can fill in the form, you will need to know a few things. First, you will need to know what your club partnership agreement says. There are certain parameters there that your club members have agreed to you are going to use when somebody withdraws assets from your club. Second, all your records need to be correct. You need to value what the member is owed. If your records are incorrect, the amount you pay him is going to be incorrect. You'll need a temporary account to record the withdrawal in so that the cash is not deleted from your brokerage account until the check is cashed. We suggest you call this account pending withdrawals. You need to decide what assets to use to pay the withdrawing member. You can transfer appreciated stock, or give them cash, or do a combination of both. Your partnership agreement should include wording describing what your club has agreed to as terms for paying withdrawals. It should cover things like this. First of all, your withdrawal valuation date. On what date are you going to determine what is owed? What is your time frame for paying a withdrawal? How much time can go by between when he tells you he'd like to withdraw and you need to pay him? How much time can pass between when you value his account and when you pay him? What are your payment terms? Does your club charge a withdrawal fee? What kind of assets can you use to pay him with? Who's going to determine this, and how will it be determined? Do you have different rules that apply to full versus partial withdrawals? So let's talk a little bit more about each of these things. Your withdrawal valuation date is the date you will value the member's account to determine what he is owed. Our suggestion is that you value the account 2 business days before the second club meeting following receipt of his notice to withdraw. We're going to show you a graphic depicting this timing on the next slide. It is fine if your withdrawal valuation date is different than your member payment valuation date. When it comes to the timing of making a withdrawal payout, here's a sample of the sequence of events we recommend you specify in your partnership agreement. First, a member lets you know they would like to withdraw some or all of their funds. We'd recommend that you require the request be in writing. At the first club meeting following the receipt of this notice, it will be officially accepted. At that same meeting, club members will need to review the club assets and determine which ones will potentially be used to fund the withdrawal. They will determine whether to fund it with cash or stock or both. The actual value of what your member is owed is not determined until just before your next club meeting, but the treasurer will need to perform the transactions prior to the meeting, so he will need guidelines to make the final judgment. The built-in delay in valuing a member's account makes sure members do not try and time the market and unduly disrupt your club operations. After the meeting, the treasurer must make the preparations necessary to pay off the member within the time frame specified. If stock is going to be transferred, he needs to make sure the member has an account at the club brokerage. If the club has decided stocks will be sold, he needs to place those orders. He also needs to make sure all the club accounting is up to date prior to the withdrawal valuation date. We recommend that the withdrawal valuation date be 2 days prior to the next scheduled meeting. On the day after the withdrawal valuation date, stock prices will have been updated and the treasurer will have all the information he needs to enter the withdrawal and transfer assets to the member. He should proceed with this process. The member should actually receive his assets within 2 to 10 days of the withdrawal valuation date. How do you decide whether to pay a member with cash or stock or a combination? In the case of a full withdrawal, these are the things you should consider. Our recommendation, if you have any significant capital gains in any of your holdings, is that your first choice be to transfer appreciated stock. The reason for this recommendation is that there are nice tax benefits when you make a full withdrawal from a partnership. In accordance with the tax code, the withdrawing member's basis in the stock received is their tax basis in the club minus any cash received. This means any capital gains they have on their withdrawal are deferred until the stock is sold. The remaining club members also defer recognizing the capital gain on the stock being transferred. Deferring taxes is generally desirable. If your club still wants to hold the stock, you can repurchase it immediately. There are no wash sale limitations, and the club will have a stepped-up basis in the new shares. Don't transfer stock in which the club has a loss. It's in the club's best interest to sell the stock so that all members can recognize the loss. Losses can be used to offset capital gains and possibly even some of your personal ordinary income. If you do not have appreciated stocks or you don't have enough to pay what you owe the member, your second choice for payment is cash. You can either use available cash, sell securities showing a loss, or members can make additional payments to increase your cash assets. Once you've determined how you plan to pay the withdrawing member, it's time to take action. We talked about the reconciliation process in the monthly treasurer task presentation. It's very important that your club records are reconciled and up to date prior to making a determination of what a departing member is owed. Once you have paid him, it's not very easy to correct a mistake. So do not go any further unless you are sure all of these things are correct. Your cash balance in bivio agrees with your financial statements. The number of shares of stock in bivio agrees with what your financial statements show. All your member payment entries are up to date. You've recorded all your expenses that happened prior to the valuation date. All the income you've received has been entered correctly, and all your investment transactions have been entered correctly. Also make sure your stock prices are up to date. Note that stock prices are updated late each evening. You cannot determine correctly what a member is owed by looking at a valuation report, usually until the day after the valuation date. Sometimes when you write a member a withdrawal check, they do not cash it right away. In order to be able to track this situation and still reconcile your brokerage account cash each month, we recommend you use a temporary account to record the withdrawal transactions. We suggest you name this account pending withdrawals so that you will know what it is when it shows up on your valuation report. Once you've determined how you're going to pay the member and the valuation date is passed, you have everything you need to enter the withdrawal. As I showed earlier, the withdrawal form is accessed from a button on the accounting member's screen. Here's the form you fill in. First, you identify the withdrawing member. Then you enter the date you will deliver his payment to him. The transaction date is the date the member is actually withdrawn from your club. The valuation date is the date we've been discussing on which you determine the amount you owe him. Here's where you specify you will use the pending withdrawals account to record the withdrawal until the check given the member has cleared the brokerage account. That will allow the units to be removed from the club assets, but the brokerage cash will agree with the brokerage statement until the check clears. You need to specify whether you're entering a full or a partial withdrawal. Here's where you enter any fees that your club charges. The only fee this club charges is the stock transaction fees associated with the withdrawal. They sold 2 stocks and had $20.01 in commissions. This example is a cash withdrawal. If you're transferring stock plus cash, you'd select stock here. If you do that, a page opens up where you can select the shares being transferred. The transfer valuation date is only needed if stock is being transferred. In that case, we'd recommend that you use the same date you used as the valuation date. And don't forget to click OK when you're ready to process the withdrawal. After it's been entered, you'll see the pending withdrawals account has a negative balance. The cash balance in your brokerage account is unchanged. When your withdrawing member finally does cash the check and it clears the brokerage account, you will get an account sync email that will tell you have an unidentified debit. Identify it as a transfer transaction from your brokerage account to the pending withdrawals account. When you're done with this, you will see the temporary pending withdrawals account is now back to a zero balance and the cash amount has been removed from your brokerage account. For each withdrawal, a withdrawal report is prepared. You get to it on the Accounting Reports page. This is what the report looks like. At tax time, you'll need to give the member a copy of this along with his K-1 form. He will have information from both forms that he will need to fill out his personal taxes. This gain or loss will be reported on his personal Schedule D. It will be reported as disposal of partnership interest. Date of acquisition is the first date the member contributed to the club. Date of disposal is the withdrawal transaction date. Just briefly, if you are paying a partial withdrawal versus a full withdrawal, the tax consequences to the withdrawing member will be different. A nice tax feature of a partnership is that a member receiving a partial withdrawal does not have to recognize any capital gain until his withdrawal amount exceeds the value of his basis in the club. We'd recommend that you pay partial withdrawals in cash. Cost basis in stock received in a partial withdrawal is not determined in the same way as it is with a full withdrawal. Because of this, it's much more complicated to determine whether distributing stock in a partial withdrawal is advantageous to the member or to the club. Sometimes clubs ask what is involved with having one member buy out another one. This actually involves making two separate transactions. You'll enter a full withdrawal for the member who's leaving the club, and then you'll enter a member payment for the member joining the club. If you use the same valuation date for both transactions, the new member will receive the same number of units that the withdrawing member had. We've covered a lot of material, but that gives you a good overview of the items you'll need to consider and process when you have a withdrawal. There are two treasurer tasks which are going to occur on an annual basis. The first is a club audit. What is an audit? It's when members other than the club treasurer verify the accuracy of your club records. As treasurer, you will organize the information the other club members need to conduct the audit. Why do you do it? Well, because it's an independent verification that your club treasurer is doing what you think they're doing with your club finances. This is especially important if it appears as though they're suddenly able to take lots of exotic beach vacations. Fortunately, it's rare to have a treasurer embezzle from a club, but it has happened. All club members are responsible for club taxes being filed correctly, so all club members should also want to know they are being prepared correctly. Just because your bivio site shows a lot of numbers doesn't mean they're useful for anything. Without verification, your taxes might just be garbage in, garbage out, and that would not be good for anybody. Unlike your investing activities, the IRS is not as forgiving about you being novices in terms of filling in partnership tax returns. It's important that every club member have a general understanding of what club accounting is about and what can and cannot be easily handled by your treasurer. Doing an audit helps to demystify your club's finances. It will also help you share the responsibility of making sure your taxes are accurate. There's no reason your club record keeping or tax preparation should be hard. If it is, it's usually because club members are asking the club treasurer to do things they don't have the tools to handle. The simpler your club finances, the simpler your audit will be, and there's no reason not to keep things simple. Finally, as we've noted before, when you invest in a club, it's like you're making an investment in a mutual fund. You want to know that your ownership is being tracked correctly. You're going to have a basis in your investment in the club, and when you withdraw money, you're going to pay a capital gain or loss on the difference between what you take out and your basis. It's important that your percentage of ownership is being tracked correctly so income and expenses are being allocated to you correctly. If not, your tax basis will not be correct. When should you do an audit? Our suggestion is to do it in January, after end-of-year statements are ready from your financial institutions and before your 1099s are received and your taxes are prepared. Why do it then? Because the most important and time-consuming step in completing your taxes is making sure that your records are correct. If you do your audit while waiting to do your taxes, filling in the tax forms will be very quick when the tax program becomes available. So it helps to fill in the time until you can do your taxes, and January is generally a slower month anyway. So what are you actually going to do to perform an audit? You're going to be comparing your bivio entries on reports and transaction lists to your financial institution records. The point is to make sure all your bivio entries are accurate. From your financial institution, you'll be comparing to brokerage statements and summary lists of transactions that you can get from your brokerage website. We provide you with an audit checklist. It gives you instructions and a series of steps that you should go through. You can find a link to it from our help page. These are the 7 steps to perform an audit. You'll verify cash balances and number of shares of stock at the start of the tax year and the end of the tax year, agree between bivio and your brokerage. You'll also verify income received, expenses recorded, and stock transactions agree with your brokerage statements. You'll verify the accuracy of your member contributions and the accuracy of any withdrawals. We go through each of these steps in more details when we present our annual audit webinars. You can also find a link to the audit presentation on our help page. In the presentation, we talk about why you do each of these steps, go through an example of how you do it, and discuss what to do if you find any discrepancies. The other annual job you'll have is preparing your club's taxes. If you have income, the IRS wants their share. We need to follow their rules on how to track and report it and pay taxes on it. Your investment club is a partnership, and the tax form you file is called a 1065 form. It is what is called an informational return. Your club does not have to pay taxes directly. All of the income and expenses are divided up between the members, and they report and pay taxes on their share on their personal taxes. Each member receives a form called a K-1 so that he knows what amounts he needs to report on his personal taxes to pay taxes on. Your club will have this kind of income. You'll have interest, dividends, and capital gains and losses from stock sales. The only types of expenses you should have are portfolio investment expenses, which we discussed earlier. Who has to file taxes? You do. If you have an EIN number, you need to file club taxes. It does not matter how long your club has been in existence or how much income you've had. Investment club members need to understand that being in a partnership means their tax life has become a bit more complicated. Because your club has to wait for the information it needs to prepare the partnership tax forms, members need to wait for the information they need to file their personal taxes. The timeline you will be working with involves these dates. They need to agree with the 1099 forms, which are sent by the financial institutions to the IRS to report your income. Financial institutions have until February 15th to get a copy of these to you. Your members cannot complete their own personal taxes until you have given them their K-1s. Because you can't finalize anything until you have the 1099s, a reasonable date to tell them they'll have their forms is March 1st. While you do have until April 15th to file your club taxes, we don't suggest that you do that, or you might have a lot of angry club members. One of the penalties for filing incorrect taxes too soon is that you might have to do it all over again and file an amended return. That would be not just your club, but also any of your club members who have also filed their personal taxes. If you file late or not at all, or you file forms with missing or incorrect information on them, there's a pretty stiff penalty. The IRS will charge you $195 for each month or part of a month the failure continues, multiplied by the total number of persons who were partners in the partnership during any part of the partnership's year for which the return is due. It adds up quickly. The good news is there are really only 3 steps to doing your taxes. The first step involves comparing your bivio records with your brokerage records to make sure your bivio records are accurate. You will do an audit and do a final check of your records with 1099 forms that you receive from your brokerage. Once you know your records are accurate, you'll complete a tax interview. This is a brief series of questions that need to be answered to finalize and confirm the information that will be entered on your tax forms. The tax interview is part of your bivio subscription and is available for you to use in February. You do not want to take it until you finalize verifying the accuracy of your records. When the tax interview is completed, your tax forms will be filled in. All you need to do is print them, review them, send them into the IRS, and distribute each member's K-1 to him or her. You can either give them a hard copy or make them available online when they log into bivio using their account. Each year we present complete webinars which get further into the details of this process. We've covered a lot of information in this presentation. We've talked about expenses, bounced checks, advance payments, withdrawals, your club audit, and preparing your taxes. Fortunately, none of these tasks need to be done very often. Don't forget the bivio help page is available to you as a source for reference material. In addition, make sure to join our Club Cafe email discussion list and/or like us on Facebook. We regularly post write-ups about various club topics in those two places. We also regularly present webinars on topics of interest for clubs. You can see what is coming up by clicking on the upcoming events link on our homepage and by making sure you have opted in to receiving our regular bivio bulletins. We hope you've enjoyed this presentation. If you have any further questions, feel free to email them to us at support@bivio.com.